Hi everyone, welcome back to my channel, the 8th wonder of the world. In this video, I am discussing whether we are heading towards recession and the approach for the investment in this situation. Please like and subscribe the channel for more updates and press the bell icon for more notifications from the channel. The global demand for raw materials, right from metals, staple crops such as soya beans, wheat, has fallen. World over, many companies are taking measures to reduce work hours which are idle and cutting output. I want to mention the concept of demand and supply. I'm keeping this video short so that you'd understand the major crux of all this. So, talking about the concepts of demand and supply, demand shock happened during the last recession, which started when the American housing pricing began to go down in 2007 and 2008. The investors were least interested in buying new houses as the value reduced and the price kept declining. But this time, this coronavirus is causing a supply side problem. The world's second largest economy has been shutting down many of its factories to stop the spread of coronavirus. There has been some news where the production facilities have reopened, but not at the large scale. Talking about the news in the US market, the US stock halted after falling 7% today. The global stocks all over the world plunge as oil crashes and the coronavirus fear spreads and many reported deaths. So you can all watch this video which is taken today.
And what we've seen this morning is now a halt. The circuit wires, as they're called, these are like trip wires for the market to keep things from going into free fall, were tripped up within the first few minutes of trading here at the New York Stock Exchange.
The financial markets haven't seen conditions deteriorating this quickly since the collapse of Lehman Brothers in 2008, and the situation is only worsening. I had mentioned earlier in the previous video that when S&P index falls below 20% from its peak, there is always a higher chance of recession. Right now it is around 20%. So keep watching out for this percentage level, which is essential to know if we are heading towards recession. It can be confirmed if there is more fall in the S&P index in the next few days. The psychological level of 11,000 on Nifty is breached and this may go below. Domestically, many new cases are reported in India. As I was making this video, there is a new case detected in Bangalore, and India has been reporting many new cases that would affect the Indian stock market further. India is facing both local and global issues. The micro issues of the S-Bank crisis, the investor sentiments have turned worse because of the disaster at S-Bank. The Nifty is heading to breach 10,000 level, maybe when the markets open on Wednesday, which is the trigger for more selling in the markets. I suggest everyone take risk positioning properly if the level reaches. But it all depends on how US and China take measures these 2 days. At the global level, markets also tumbled further as the panic investors fled to bonds to hedge the economic shock of coronavirus. The oil markets witnessed the worst price dip since 1991 Gulf War as the Brent prices plunged to 31.02 per barrel. This has been the worst fall since 28 years. Goldman Sachs analysts are predicting the crude oil prices may fall below 20 rupees per barrel mark. So it is crucial to have capital to invest at a lower cost. I suggest, as I mentioned in the previous video, to book profits if you're sitting in profits and there can be a partial exit. So you will have money to buy more good companies to make your portfolio more robust. The Indian stock market will rebound, deliver big in 2020. The companies which will reward big are available at a lower cost, and you can all watch my other videos to know which are the companies. So wait and watch for both the domestic and the global news in the next few days, and keep an eye on each and every important financial news. So right now, it is hard to call if the world is in recession. For sure, there is a lot of uncertainty as the world market has not seen a situation like this before. I want to quote a statement of Warren Buffett that as an investor, it is wise to be fearful when others are greedy and greedy when others are fearful. This statement is somewhat of a contrarian view of the stock market. To tell the truth, it sounds simple in theory, but in reality, it isn't very easy. I suggest you all can enter the market when there is more certainty and all the global issues and the economic issues are sorted out. Till then, be wise. Look at the global cues for any signs of recovery which is a recovery out of this bear market. If there is a recession, be wise, hold your bets until the equity class is not wanted by many. As the wise Warren Buffett mentions, be greedy when others are fearful. Thank you.
The coronavirus, and even larger than that, over the weekend, this new price war as far as oil is concerned.